Crude oil posted a little rise last week, taking the support from the crucial support at 61.5. We have discussed this several times that 61.5, 61.2 should offer a maximum support here, and any breach below this should take it towards 60. Can we see this just a candle of consolidation? Can we expect a breakout move? What we had seen here is stronger bearish candle. Can we expect this bear run to continue and trade take the oil prices below 60, the critical milestone? Or this is the beginning of reversal here. The price is going to move higher. The price is going to move all the way towards 66, 68 zone. What should be our strategy in order to profit trading crude oil in the coming week? We are going to see here with the help of charts and indicators. This is a weekly forecast. I do share my twice a day updates for crude oil, where I do give the trading levels along with the strategy. You can watch every day, first with the Asia and Europe session, next with the US session. And yes, this is the only channel to deliver twice a day updates on oil and gas. Subscribe, press the bell icon, do like, share and comment. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. Let's start. Towards the end of the update, I'll be sharing the trading levels, so watch till the end. Oil on the weekly charts, you can find out how it is traded. See, since the rise here, we have seen a stronger correction taking the support from 64. We have seen a retracement towards 70, then lower lows towards 61.5. What has happened for the last few weeks? You can see 61.5, 61.2 has offered it a very strong support here. And now this zone is crucial for oil to break below, because any break below this should take it all the way towards 60. Right now, what is happening? Since the retracement, we have seen a pullback, again a retracement. Now look at the bearishness here, here and here. You can find out the bearishness is getting diminished. Now diminishing bearishness is a possible indication of beginning of reversal. Yes, if you divide this from here, you can find out this possibly means a reversal or beginning of reversal. But right now it is too early to conclude, as long as 64 and 66 zone is not taken. Again, the 63, 64 zone, this is the zone which we had waited last week also to breach beyond. It has failed to do so. And now if you see oil trading beyond this zone, you can expect the next milestone to be towards 66, which is going to remain a pretty crucial milestone for oil to break beyond. And if at all it does trade beyond 66, that is the possible beginning of reversal. If you divide from here, you can possibly expect a symmetrical move which can in fact take it higher. Let's wait for the coming week. That is going to remain pretty crucial. And specifically, a breakdown here is also something you should watch out for. Why? See, this is delivering lower highs, lower lows, and if it delivers a breakout here below 60, that should confirm greater down move here. See, the stochastic here is staying oversold. The MACD on the weekly charts again has crossed over for a sell, and this is again a slight bearish sign. See, twin peaks are done. Crossing over here is a slight bearish indication. The RSI is placed comfortably here. Coming to on the daily charts, what has happened here? The support here has got stronger. The upside resistance at 64 is equally strong. We have seen twin peaks here, but as in how the price moved higher, we have seen a pullback as well, which is not so supportive sign for the bulls. Pretty important for oil to trade beyond 63, 64 zone, which is very, very crucial here. And if at all it does trade beyond 64, the potential move towards 66 cannot be denied. Now notice here it has formed a very good support at 61.5, 61.2. Again and again I am highlighting the levels. As long as this zone is not taken now, you should not be treating crude oil as bearish. That is pretty clear. But yes, once it trades below this, I think you should not stay with the buys. We are looking forward to a move towards 60 and in fact lower levels possible. But right now, yes, I can see the bulls are not very much present and the bears are absent as well. The moving averages are trading with divergence, staying bearish, looking downwards. The stochastic here is also trading bearish. The MACD almost staying flat since the crossover on the sell side. Not yet giving up, and thus it is too early to conclude whether it is going to give you a breakout on the buy side or on the sell side. But yes, a good potential zone on the upside towards 63, 64 is something you should watch out for. Beyond this, the bullishness should prevail. RSI trying to bounce back. Coming to 4. Now see what has happened on the 4-hour charts. If you look at the move here, see largely this is a box movement. Flat top, flat bottom. Neither willing to break out on the upside nor willing to give up on the downside. And thus, as long as oil prices stays in the zone, you have to remain extra cautious. What has happened here? We have seen a sharp drop, then a stronger reversal. What it is covered in 6 to 8 candles is covered in just couple of candles. And then immediately it has shown a pullback. Remember, the moving averages are still bearish. It has posted a flat bottom, and let it stay beyond 63.2 64 zone. You can expect more bullishness to prevail from. Stochastic here looking downwards, trading with moderate bearishness. The MACD is almost flat, waiting for a crossover here. The RSI is flat. It is again not indicative of much move on the 4-hour charts. Let's also have a look at the Heikin-Ashi here. If you see the Heikin, firstly on the weekly charts, it is trading bearish. That is pretty clear. Next is if you see the move here, so far it has created a very strong support here at 61.5. You can see 4 to 5 weeks it has failed to trade below 61.5. And yes, on the upside, the resistance from 20 period is also pretty strong. So first thing is oil has to trade beyond 64, then it has to trade beyond 66. This zone on the upside is going to remain the most critical zone for oil to trade beyond. Any move beyond this should be an indication that it is going to deliver similar moves like this. This should be a breakout. But right now it is not showing such reversal. Rather, the moving averages are trading bearish here. Coming week is going to remain pretty important. Stochastic at bottom trying to bounce back here. The MACD just crossed over here. So this is on the Heikin-Ashi. We have already seen the normal candlesticks. The indicators remain the same here as well. Look at the daily charts. On the daily charts, the candle is red. Since the retracement, we have seen couple of red candles. It is symmetry here. Wait for a breakout either which ways. A breakout on the upside or on the downside should be a confirmation of possible direction here. Right now, it is very much range bound. And yes, indicators we have already seen. On the 4-hour charts, when you see again, since posting couple of stronger candles, it is turning red, which is not a good sign for the bulls. Again, on the downside till at least 61.5, you have to remain extremely cautious. Let's also have a look at the monthly. What's happening on the monthly charts? Since the retracement, it is turned red, lower highs are seen, flat base is seen. It can still show you swings and move towards 70, but right now it is not showing such a strength. The closure of the current candle and the beginning of next candle is pretty important. If at all it closes above 66, that should be a good indication for the bulls. The moving average is trading with divergence since the crossover is not a good sign though. Also, let's have a look at the normal charts here. If you see the normal charts, since the retracement, last month we have seen the first bearish candle. And the current month is staying range bound here. It has formed a wick. Now, if it trades and fills this gap below 60, you can say that this could be the possible beginning of a greater down move here in oil prices. Lower highs, lower lows. This time in the next few months, in fact, you can see oil trading below 55. But right now, I'll say it is trading range bound. It has to trade below 60 on the monthly charts or to trade above. And right now, beautifully, it is stayed here in the zone. Specifically, even if it trades beyond the median towards 66, you can say it is turning bullish. It is right now not showing much strength. The stochastic placed comfortably. The MACD is still trading bearish, hitting the bottom here. The RSI staying flat. So now we have seen the charts and indicators. Time for me to give you the trading levels. And before I give you the trading levels, if you're willing to learn this art of trading, do not miss to join the 34th mentorship batch starting coming Monday, 15th of September. Equip yourself with all the tools, techniques, and strategies which can help you identify the profitable trades with ease. Connect with me, write an email, ping me or telegram for queries. Those looking forward to a trusted partner, which offers you a SAF-free account, lowest spreads, no hidden charges, easier transactions, and easier withdrawals from across the globe. You can find the recommended broker link also in the channel and video description. Now, with that, where to buy? Very simple. And yes, if you're just willing to trade as per the signals, you can be part of my signals channel. Again, reach out to me for queries. 62.6 itself you can buy. Expect 63. Now the levels remain the same: 63, 63.5 and 63.8, 64. Till here it has got tremendous resistance. Once oil trades beyond 64, I will wait for 65.2. And once it trades beyond 65.2, 65.8, 66. This is the most crucial zone which oil has to trade beyond, because beyond this expect 67.6, 69.2 and then 70 very very soon, if not in the coming week. Right now it is not showing such a strength here, but yes, these are markets. Once it breaches beyond 64 and 66 zone, extreme bullishness should prevail. While on the downside, you can sell at 62, 61.8, very good support zone. Expect 61.5, 61.2, the next target levels. And if this is taken, we are looking forward to 60.4, 59.7 and 59.2. Below this, expected to deliver a move towards 57.8, 55 levels very very soon. I am not expecting such a good drop, but yes, once it trades lower, once it trades below 60, the bearishness might increase here. Hence, take your trades and positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch. Join my signals channel. Reach out to me for your queries. Join the free Telegram channel for live market updates. And join the channel memberships here on YouTube to support the effort. Thank you. Have a great profitable trading day ahead, trading week ahead, and happy weekend. Thank you.